In the event of an economic disturbance or a crisis, gold and silver are your metals. Palladium and platinum are not going to help you. They won't.
I think silver is a very interesting hybrid. First, walk me through the fundamental use case for silver, Dana, before we get to the precious part. Today, we have an old friend, Dana Samuelson, who is the president of the American Gold Exchange.
I'm a physical dealer. I've specialized in the physical precious metals, vintage coins. That's my area of expertise. I'm not a mining stock expert. Gold's holding up pretty well, considering that we've seen the dollar go from about 104 to 108 on the dollar index, and the yields go from about 4.15% to 4.5% on the 10-year treasury. You would expect gold to be $100 lower than it is right now. I do think you need to protect yourself in the event that the U.S. goes into a real strong economic downturn, because then there's liability in the price because demand will fall. Mining supply is actually greater for palladium, which is a surprise to me because I thought palladium was scarcer, but they're both about 18, 19 times scarcer than gold. So fundamentally, they're cheap relative to gold today. I like both of them, but they're speculations and they're longer term holds. I do think you need to buy at the right time. And in the price cycle, we're getting into a dip right now that looks very attractive to me because I think both metals are buys under 900 and we're close to that today.
Welcome to the Future's Edge. I am Jim Iuorio. That's Bob Iaccino. Today we have an old friend, Dana Samuelson, who is the president of the American Gold Exchange. Before we get started, I want to thank you guys for all the support we get. Each one of our episodes is getting more and more views than the one before. This is really taken off. We're grinding legacy media into the dust, which is an added bonus, and I want to thank you for that. Also, thank you to our sponsors, Hardcore Italians. Please go on their website. You get 15% off. Use our link and our promo code, which is FU. And yes, it stands for Finance Unfiltered. It doesn't stand for anything else. I don't know where your people's minds are.
Full disclosure, just like we always do, this episode was sponsored by American Gold Exchange. Now, you can go back and watch old shows. Jimmy and I are still bullish on precious metals. We were bullish on industrial. We're not so much anymore. We do have differing opinions, but we agree on this one. We're still bullish on gold. Dana Samuelson from Amerigold Exchange, or the American Gold Exchange. Go to his website, check it out. It is sponsored by him. So if you like gold, do something for him and do something for the show and use his actual company. I think I'm going to be buying some palladium, as you will see in this episode.
Dana, how are you?
I'm great, Jim. It's great to see both of you. Hi, Bobby.
Good to see you, Dana.
Where are you located physically?
Well, I'm actually up in Missouri. We have a little farm in Missouri as our getaway place, and I'm up in Missouri right now for the holidays.
That's awesome. Where are you normally? In New York?
Austin, Texas.
Oh, I was just in Austin in June at a Bitcoin conference, it was so much fun. That was the first time I'd ever been to Austin. What great food, great music. It's an interesting town. You like it?
I love it. I've been there almost 30 years, and if you ever want to go again, I can drag you through the mud down there real well.
Nice. Oh, so you've been there 30 years. So you were there before it was a boom town.
Little tiny college government town before it took off in about 2014, 2015. We were just about to get gentrified, and then the great financial crisis held that whole cycle back for about 5 years, but it's exploded in the last 10, just exploded.
What's the gold that got discovered in Austin, Dana? To use a pun.
It's got great quality of life. It's physically a small city. So unlike Houston or Dallas, which are geographically very sprawled out, Austin's main attributes, the river downtown, the downtown area, all the clubs that you want to go to for music and restaurants are all in a very concentrated geographical area, which make it very accessible. And it was always a cheap town as well, because it wasn't a boom town, which it's now become. So the rents are going up a lot. They've gone up a lot. We've got, I think, 14 cranes downtown right now building condos and high-rise buildings that aren't going to get filled up. So I think we've overbuilt a bit, but it's always just been very accessible and a lot of fun. But you have to know where to go, because what we've done is we've kind of paved paradise and put up a parking lot where
nice Joni Mitchell reference.
Yeah, where the pricing out the musicians is really what we're doing for rent. So we've seen some of our best musicians leave town actually over the last couple of years. Cindy Cashdollar, who is a fabulous pedal steel player, lap steel player, she's moved back up to Woodstock, New York. Red Volkert, who was a monster guitar player, moved back to Virginia. You know, we've lost some good people because of the higher rents, and it's hard to park in places now. I actually had a scooter for a few years that I would tootle around on just because I could park it easily. But my wife took that away from me a couple of years ago.
So I'm just curious, like from a perspective of what you just said. So obviously, like, you know, I grew up and Jim still lives very near to basically a concrete jungle, right? I spent most of my life, except for 6 months in New York and 4 years in Los Angeles, in Chicago. And now part of the reason I moved to the part of Southwest Florida that I did is it had a reputation prior to me coming here as being still sort of there's areas you could find there's still sort of a fishing town. I don't fish, so I don't know why that appealed to me, but probably just kind of getting away from all that. So you're saying, in your opinion, Austin itself is kind of going to lose its Austenness? Don't they have some sort of slogan there, like keep Austin, weird. I don't know, weird or something like that?
Yeah, that's the slogan. I actually know the guy that trademarked that, and he's done quite well with that over the last 40 years. But yeah, it's where the reason why Austin was cool and a fun place to live. Most people that are coming into town over the last couple of years don't have a chance to see or experience any of what we did get to see that I got to see over the last 30 years. So yeah, it's the cool factor is brought in a lot of new people that are slowly diminishing the cool factor, for lack of a better way to say it.
So at the risk of a corny segue, we're talking about the attractiveness and something getting so attractive and then overbuilt and then whatever. And then all of a sudden it turns around. Now we've seen gold since the election. Like prior to the election, I had said, and I saw you in, last time I saw you was in New Orleans, and we talked about this too. We're going to get to the punch of this. But I thought the two candidates running for president, one was great for gold. One was pretty good for gold. The one who was pretty good for gold won. So I think over the last month or so, we have to take out the great for gold candidate premium that may have been put in. So gold right now is on my watch list, stay long it, but I think there's better things. Do you have anything to add to the gold discussion about that before we get to the real stuff?
I think you're fundamentally right. What we've seen primarily with regard to gold is it's just a punch up in the dollar for a couple different reasons. The dollar's gotten stronger by a big degree over the last 2 months since Donald Trump won, which has pressured gold and held it in check. And the yields on the treasuries have gone up a bit too, which are contrary to gold rising in price due to their inverse correlation. But gold's holding up pretty well considering that we've seen the dollar go from about 104 to 108 on the dollar index, and the yields go from about 4.15% to 4.5% on the 10-year treasury. You would expect gold to be, $100 lower than it is right now. So gold is holding up well, but I do think that there are better values to be had with silver in particular, but you have to be patient. And another one that you wanted to talk about today, which is why I'm here.
Platinum and palladium, which I think, we're going to get to. Because by the way, my speech in New Orleans was about the case for industrial metals, particularly platinum, palladium, and to a lesser extent, silver. The thesis was that we are going to completely take out the copper premium where we're all pricing and everybody driving in EVs. Trump is going to pull that, get rid of the tax credit, which Musk wants him to get rid of the tax credit. And when they did that in Germany, month over month, 40% decline in the demand for EVs. So, wow. Bobby, you go first.
Yeah, I want to go back to gold real quick. I know we're basically doing a platinum and palladium.
No, I like to talk about gold too.
Yeah. We're doing a platinum palladium hoedown, which is what Dana called it when he suggested this show, which I was, Dana, very happy that you did that. But I wanted to ask you both about something because it's something that Jim and I honestly have talked separately, even before we started doing this show, about how when you have a thesis on something, you should invest in that thing. And subsequently, I own physical metal, quite a bit of it relative to the rest of my portfolio, as well as I trade in and out of gold futures. And people have said to me, like I did a Fox News a couple of weeks ago, and they said, you still like gold? Yes. And they said, what names do you like? And then my answer sounded strange to a lot of the audience. I said, none of the names. I like gold, right? Specifically gold. I looked at Well, let's go to gold first. If you look at gold since the rotational low, and I'm talking about the futures contract now, that's November 14th, gold is still up 2.88%. But you take something like Freeport McMoran and you go back to its rotational high, September 24th, right? Slightly earlier than gold's rotational low. It's down 27%, right? So do either one of you have any sort of explanation as to, I mean, I have my own reasoning, but I wanted to hear both of yours. Jimmy, you go first. Why are the miners doing poorly while gold, as Dana said, is holding in really well?
So I think, based on my research, I think you picked the wrong miner to underscore your point, because
Okay.
Freeport McMoran trades more in conjunction with copper, much more. Gold is only about 20% of its production, where copper is 80%. Don't quote me on that, but
No, that's fair.
the correlation is very tight. And I think this fits into the platinum palladium discussion, where is that copper was, everybody was going to drive EVs, and now we're not. There's like 600 pounds of copper in an electric vehicle. Now we're pulling that back out of the market. So I think Freeport suffers with that. The gold thing, I think, is being bolstered by central banks. Some comments about interest rates and the dollar, and I think those are extremely valid, but the central bank thing is probably what's keeping it up. Dana, what do you got?
Real quick, Jim, because like I just pulled up Barrick Gold, right? I don't know if that's your proxy in terms of stocks, down 28%.
Wow.
Since
Okay,
the
so I got
October
no
high.
answer for that. I thought it was a
Yeah,
smart
I'm
guy
just
with the
curious.
other one. Now I'm dumb because I got nothing for that.
And again, there's
Dana
a
does.
curiosity statement, right, Dana? Because like if I like gold, I buy gold. I don't go to the names, but I'm just curious.
Right. Well, I'm a physical dealer, so I specialize in the physical precious metals, vintage coins. That's my area of expertise. I'm not a mining stock expert. I rely on other people for that, like my friend Brian London, who you all know very well.
Yeah, we can
as
ask
an
Brian
analyst,
next time he's
and
on.
Rick Rule, of course. But what I've seen from an altitude of like an airplane flying over is, number one, the mining stocks, to me, have underperformed relative to the historical performance over decades since the ETFs came into existence in 2008, where you could buy gold on paper. So I think that the ability for people to buy gold on paper has been enhanced by the pure ETFs like GLD or the spot funds. And that's taken some of the mining stock thunder. Now, the mining stocks are also more volatile. They're leveraged to the gold price, and we've seen a nice run up, and now we're in a corrective phase. Plus, we've had a pretty good run this year, and it's year end. So there could be some profit taking that's year end driven more than anything else. I mean, stocks are getting hammered today, and they got hit last week as well. It's thin trading, of course, because it's a holiday. But there's some year-end positioning that's going on, which could be coming to bear right now that would be a bit abnormal. So we'll just have to see how that goes. But I think that the mining stocks have been fundamentally undermined by the existence of the ETFs for about the past 15 years. And that's why they have underperformed in this cycle to a degree.
Brian London, Rick Rule, if you guys see this episode, reach out to me or Jim or both and answer that question for us. But I think that's a really good explanation, Dana.
I do too.
Thanks.
So let's move on to the main course, because my pitch was more for palladium than platinum, because my thesis was that we're going back to internal combustion engines. We use that shit. The internal combustion engine is not dead. The platinum palladium ratio, palladium had come off like 60%, so I thought they would be the big beneficiary. So far, it has not reached my thresholds to buy it, but platinum does look more like a buy.
For platinum, most of the demand is for diesel catalytic converters for platinum. Palladium is more for gasoline catalytic converters, the way I see the equation. Also, most of the platinum supply, the majority of it comes out of South Africa, where Russia produces about 10 to 15% of the platinum supply. Palladium, it's about 50-50 Russia, South Africa. And I think that palladium is more subject to what could happen in the future with regard to Russia and sanctions. And we saw a run in the palladium price already this year, from about 950 1,000 to 1228, when we had conjecture that we might sanction Russian palladium supplies. So I think palladium is probably the better speculation. They're both down to about, close to 900 an ounce today. Mining supply is actually greater for palladium, which is a surprise to me because I thought palladium was scarcer, but they're both about 18, 19 times scarcer than gold. So fundamentally, they're cheap relative to gold today. I like both of them, but they're speculations and they're longer term holds. I do think you need to buy at the right time. And in the price cycle, we're getting into a dip right now that looks very attractive to me because I think both metals are buys under 900, and we're close to that today.
I'm going to put up one of your charts, and I'm going to put up the platinum one because that's the one that I have the first question on from my perspective. We talk about platinum as a precious metal, and I've always kind of wondered why it's also precious. And when from a person who deals in the actual metals, do you consider this to be precious because of scarcity? Do you consider it to be precious because of the use as jewelry, or is it a combination of both?
It's both because of its overall scarcity, especially relative to gold. Platinum and palladium have always been considered precious metals. Platinum jewelry has been big in Asia, especially Japan, which is a major demand center for platinum. Although that's come off a bit because of what's been happening in Japan over the last couple of years. I'm not sure how much platinum jewelry is desirable in China. Gold I think is favored there. But this is a trader's chart. You want to buy the dips and sell the highs is really what that is. And you've got the COVID low when everything got hammered at 596, and then the rebound when COVID hit and supplies got hampered because of mining production was impaired by the COVID virus, which put the platinum price up to almost 1,300. But since then, it's been pretty much range bound between about 900 and 1,025, and above 1,025, 1,050 in particular is really hard for platinum to break out. So I think that the potential for platinum to really move a lot higher is a lot of it has to do, I think, with the Chinese economy, to be honest with you, for both metals. This is just my own observation. I don't have any empirical evidence that I can share, but I do think both of the price performance of both of these metals is to a degree tied to the Chinese economy, especially palladium, to be honest with you.
So to me, Dana, this chart trades, this is going to sound nuts, but it trades similar to crude oil, and I'm going to explain what I mean by that. Crude oil has a trending characteristic, and then a consolidation characteristic. Now, this chart goes all the way back to 2015, it looks like, and you would see quite a bit more trending in the crude oil chart than you see in this particular platinum chart. But is that right? Like, do you? And you're not making any recommendations here, I'm sure, but do you see this sort of tightening consolidation that we've gotten in since about, let's call it late 2023, as the potential to break out to maybe somewhere above 1,100 or somewhere around the $800 range? Or do you just look at it and say, look, this is the trending area and I'm not saying anything about it either way?
I don't know enough to be intelligent about whether we'll get a breakout or a breakdown. I just look at this as a trader's chart where you buy the dips, play your position, and then have your stops, your trading stops. And then when you get to a profit, or especially near the top of the chart, you take your profits or look to short. I think this is more of a trading metal right now until the global economy becomes better and we see more economic activity in China and in Europe. I think that this will continue to be a trader's chart more than it will be a fundamental investing chart. I do think there's fundamental value to be had, but not until the economies of the world can really gain traction and grow to a greater degree.
So, okay, I definitely have a question on this, but before we move on, let's talk about your company real quick and how this works. Like, let's somebody wants to establish physical position in gold, palladium, or platinum. They contact you. How does it work?
Well, we buy and sell the physical precious metals products. For gold, there's a lot of sovereign minted products that are made by the U.S. Mint, Canadian Mint, Austrian Mint, Australian Mint. There's refineries in Switzerland and Asia that make bars. All that's available in gold at very competitive buy-sell prices. When you get into platinum and palladium, there's fewer available products to be had. The supply of platinum from Canada for platinum maple leafs, the US for platinum eagles, and Switzerland for platinum bars is much better and more competitively priced relative to the spot price than palladium, where the supplies are much thinner. and much more erratic. I call them, the mints tend to burp out little production units of palladium sporadically. And while they're available, you can get them at a competitive price. And once they're gone, it's market value, supply and demand that dictates what kind of a premium you have to pay. So the premium you're going to pay for palladium relative to platinum for physical products could be higher and less competitive because of the sporadic physical supplies in palladium that don't tend to exist with platinum.
That's interesting to me. So, but with the gold, like let's say I wanted to buy, 5 1 ounce Eagles, and I would send you the money, open up an account, and then you would send those to me. Is that how that works?
Yeah, basically what we do is we do a transaction over the telephone like you would buy a stock. Once we have a trade in place, we send you a confirmation, you pay us, we have good funds, we ship you the merchandise, you physically receive it. That's how we do it.
So if I'm a buyer, what am I paying over spot?
Well, there's a premium for manufacturing, distribution, and profit to us. So competitively priced bars tend to go at 2 to 3% over the gold price. Less desirable sovereign minted products like Canadian or Austrian products are a little bit more competitively priced, go for 3 to 4% over the gold price. Gold Eagles, the U.S. Mint charges a little bit more. They go for 4 to 4.5%, 5% over the gold price. But you get a commensurate bid too. So the spread on gold is about 3 to 4% for a physical ounce from a competitive dealer like myself.
So what do you see these stores when you're driving around, we buy and sell gold. What are they doing? Like somebody once told me that.
Ripping you off. But anyway,
sorry. Well, yeah, somebody once told me that they know for a fact that they pay you for an ounce of gold with, say, an American Eagle, yet the coin weighs more than an ounce. So they kind of melt them down and sell them back to the mint. I don't remember what the whole story was, but can you kind of go through the actual process of what some of these guys do and why somebody should come to you guys instead?
Well, the smaller dealers that are around the country, the mom and pop shops, they tend to make their money when they buy. If they buy cheaply enough, then they can just sell to the market, to people like myself or other major dealers, and earn a profit that way. If they don't resell to their own clients, their volume is lower. So they have to, enhance their profitability by having a wider spread. So that's what they tend to do. Now, we're a national physical dealer, mail order. We do a pretty big volume. We go straight to the mint for product or straight to the market for product if the mints are low. And we shop the entire national market if we need product or if we want to sell product. So we have our finger on the pulse more actively than some of these smaller places too. And there is a problem with counterfeit merchandise. And some of these smaller dealers, or especially pawn shops, my God, they don't have the expertise. And some of these counterfeits are pretty good, which is why it's important that you do business with a long-standing, reliable dealer in the physical sector. The kind of counterfeits that are out there won't fool a dealer like myself, but they'll fool the public pretty easily these days.
I actually stopped in a place like that recently. I just was picking up some food and I saw a dealer and I'm like, let me go and see what they got in there. And they showed me their case of shame, which was the counterfeits that they had bought that were all stacked up in one special case. And they're like, you want to buy any of these? No, I don't know what the hell they are. You guys don't know what the hell they are. I wanted to ask, I'm going to put up your Palladium chart if I could. And I wanted to ask you specifically, does anyone ever ask you if it's possible to power an arc reactor for a superhero with palladium like they did in Iron Man? See, he's laughing. So somebody's asked him that before.
Somebody has, yes.
No, it has, but I absolutely love that.
Yeah,
I love that movie, Iron Man, and what Robert Downey Jr. as Iron Man was able to do. One of my customers calls Elon Musk Tony Stark.
Yeah, I've heard that before. But yeah, if you haven't seen that, Jimmy, that Iron Man 3 is worth a watch just for that. Where it's like palladium in the chest, horrible way to die.
Can I comment on this chart real quick before Dana gets to it?
Please.
Okay, so this was one of the reasons of my thesis of palladium being along was because of this chart. Sometimes I come up with a trade just based on where my stop is. And when you look at this chart, the stop seems pretty evident. Settle below that low and then any weakness below it. So settle below 825 and then any weakness the next day, to me, would signal that's where I'm out of the trade. Which, by the way, I am not in the trade yet. I want first to settle above 1100 before, and I was clear of this in the speech, and I've been updating people on Twitter since that time. I want to settle above 1100 first, and then another settle above 1250, and that's when I'll have my full position on. Dana, before you talked about Palladium being more associated with gasoline engines, right? And platinum more with diesel. Okay, you also mentioned China. China is the biggest subsidizer of the EV bullshit. Is there any belief that that's not going to continue? And if they stop doing that, then all of a sudden the platinum and palladium trade really kick into high gear. If Europe has stopped giving people money to buy EVs, then America ostensibly will stop soon. If China ever even rumbles about it, that could be the thing that pushes this much higher. You got anything on that?
I don't, but I do think that China is just becoming a juggernaut when it comes to EVs, and they're going to continue to grow and dominate the market. And whether the world will accept their vehicles
is the question.
What have we had problems with Chinese products before? Sheetrock, for all things, was a big problem. Baby powder or baby medicine, baby formula was a problem, Chinese. So, I think the world has a fundamental issue with trusting some of the integrity of Chinese products for some of these reasons. And you might be able to buy an EV that's cheap out of China, but where are you going to get it serviced, number one, and how long is it going to last? I think are the two big questions there. But they are going to become the dominant EV producer over the next 5 years. It just depends on whether they can gain global market share, I think, or not.
Well, no, and that is interesting. And Bobby, when we had Vivek Ramaswamy on the show about a year or so ago, he was for rerouting our supply chains eliminating China eventually from the process. Do you believe that we've made any headway on that so far, rerouting to Mexico and India?
I don't.
No.
No, I don't. I haven't seen any evidence of it. I haven't heard it. I have some friends who actually work in auto manufacturing. And one of the things they were super concerned about with Trump with the tariffs, which is a common story, right? But one of my friends who works within the manufacturing of what I call now the big two in the US, he said to me that people don't understand that, like, to put together, for example, an American made engine, it travels across both borders 3 or 4 times, that engine, from getting a component that's made in Mexico that then gets shipped through the US up to Canada to put together with another component that then gets shipped down to a US made block that's then sent back down to Mexico for some more components. And it goes back and forth like that. Now, I think that's probably the model, right, of what they're trying to do with China. And this is where I get sort of, I don't know if I answered your question, Jim, but I want to go to Dana real quick. I'm looking at this chart here and I see VW scandal, right? There's not much of a move there. Now, I guess I was really happy when I saw that you identified the VW scandal as an event that affects the price of palladium. But if Jim were long at 3.7, it looks like that's supposed to be 531.70 down there. And I'll put the mouse there right here. I don't think he'd be stopped out at 470. So other than just supply scares, it doesn't look to me, I'm going to say something I never say, you should only buy palladium. This is what it looks like to me. It doesn't look like you should ever sell it.
Well, palladium is more gasoline catalytic converters than diesel. So I probably should have actually taken that tag off of this chart, to be honest with you. I'm sorry.
Okay, so that was going to be my question. I mean, so you're talking about the scandal of them fudging the sort of emissions, right?
Yeah, that broke the platinum price from about 1,500 down to 900 at the time because suddenly the demand fell way off. Now, what's interesting about palladium is that it fundamentally has a supply structural deficit that's been ongoing for 8 or 9 of the last 9 or 10 years. So there is a there's a supply deficit. The mines have not been able to increase production so much, but what is increasing is both demand for palladium on an annual basis and recycling. So recycling of palladium is a big key to supply. And that's going to be where the swing is on whether palladium remains in a deficit or can move into a physical structural surplus going forward. So the key there is, okay, how many cars are going to come to end of use that they can actually recycle from the catalytic converters? and whether they can grow that recycling enough to fill the gap. Now, the market over the last 2 years believes that the above ground supplies of available palladium can supplement what the structural supply deficit has been. Now, whether that can continue or not, we'll just have to see. But I do think that the fundamentals, number one, for palladium are better than platinum. The previous price action's much better. As you can see, it's been 2,900 twice, which is less than a third of today's price. Jim, I would disagree with you. I'd like to buy palladium at under 900 if I can buy it. I think that's a great buy. I do think you need to protect yourself in the event that the U.S. goes into a real strong economic downturn, because then there's liability in the price because demand will fall. But if, I was watching Naomi Prince the other day on a private podcast I signed up for, and she said she thought China might surprise to the upside this year in 2025 economically. And if that's the case, that would be good for both metals, but I think it would be especially better for palladium, to be honest with you.
So I think two things. Number one, I think that's not a very difficult thing to say, that China might surprise, right? I think that's no offense to Nomi, she's incredibly bright, but I just think it's a very easy position to take. As a matter of fact, I'm going to say it too. How's that? I think China's going to surprise to the upside. But this chart here, to me, for those of you that didn't get a chance to see Jimmy's presentation in New Orleans, I actually did get a chance to see it, even though I wasn't there, Jim. You don't know that I saw it. This chart actually supports him quite well, because people might be looking at this chart and say, Bob just said he would only buy platinum. What is he, nuts? Look at basically 2021 all the way down to now, right? And that to me seems obviously to support Jim's thesis, right? Because we obviously had the spike during COVID, just like we saw in the platinum chart that Dana sent over. We see it in the palladium chart. Then we saw sort of a secondary spike. Okay, I get that. But then we saw the collapse of basically everything's going electric. All the regulations about, even California eliminating gasoline engine cars by next month or whatever crazy timeline they put on, all completely not possible and useless and insane to me. And it completely supports Jim's thesis. Jim, I understand why you want those breakouts up first. Dana, that's more of a trading thing where it's like, you rather buy strength than buy weakness. And right now this chart is still showing weakness. So that's more of a comment than anything. But Jimmy, that does that sort of summarize your thesis more, where the green is going out the window?
Yes, it's about overreaction.
You can see it on the chart.
Yeah,
right?
It's about overreaction and it's about insanity. Like the notion, and again, we took advantage on that on the copper trade. That was my speech from 3 years ago at the same conference, and it worked pretty well. But now all of a sudden you look at it, and copper, and I know we're operating still in structural deficits copper, but if we're taking out China in the short term, and we're taking out just all these ridiculous mandates for EV that we've had, which, by the way, California has doubled down. Other countries around the world who haven't wised up are doubling down as well. But the federal government in the United States is the first shoe to drop. But absolutely. And I love the consolidation that's happening in here, which is the same as the consolidation before. And to underscore Bobby's point too, it is a more reasonable thing for people who don't trade as actively as us to look at it and say, yeah, 900 is the level to buy it, or under 900. And I actually don't disagree with that. I actually think, should I put a little bit on there? I might. But I like, as a trader thing, we like to buy strength on the breakout. But to your point, Bobby, 100% that it is about overreactions. And I think the overreaction of we're never going to buy another internal combustion engine is absolutely absurd.
So Dana, if I could, I want to buy palladium from you. Walk me through that. I mean, let's just go off this chart, since it's going to be at a different price when people see this show. It's $907.20. I've never seen a palladium. And I said that awkwardly on purpose because I think it's funny. I've never bought palladium. I've never seen a palladium. What does it look like? I say, okay, I want to buy 1 ounce of palladium. What do you send me? What do I send you at the price at $907.20?
Well, again, it's subject to what physically is available in the market from either the mints or the refineries as a primary supplier, or the market as a secondary supplier overall. And that is when the market tends to become more problematic. The U.S. Mint makes palladium 1 ounce eagles, which don't come out very often. They don't make many of them. They tend to have a higher premium. So we tend to shy away from those unless they're the only alternative. The Royal Canadian Mint makes 1 ounce Palladium maple leafs. They're really the only regular issue Palladium sovereign minted quote unquote coin out there. So we like those when they're available, but we can usually get Palladium bars from the Swiss refineries. So that's where.
And those weigh how much?
1 ounce. Typically, these are 1 ounce products. So you're going to pay about $100 as your price over the Palladium spot price to physically buy Palladium.
And this is a chart of Palladium spot, right? So
Correct.
in theory, I call you and it's 907.20 and you go, yeah, right now I'm sending you a 1 ounce bar from Switzerland. It's going to cost you about 1107.20, give or take. Obviously, things change on a minute to minute basis.
Yeah, 1007, about $90 over. About $90 over, $100 over. So
let's cut right to the chase. When this is over, can I get 1 ounce?
I want a Palladium. Right now? I want an actual Palladium.
Yeah. We have Palladium bars available.
Well, you do? Okay, maybe I will call you because I've always bought gold. And by the way, I think physical Palladium, there's not as compelling a story to own it physically as there is gold, but it's still somewhat compelling, I think, for a lot of reasons. There are taxes. We'll talk about that offline with other people too. But anyway, because my point being is that if we're in a panic that we would rather buy gold than Palladium, I'm going to trade on paper more, but I actually might buy some things from you. So that's pretty good.
Well, so that was Jimmy, you just went into my next question. Is that actually true, Dana? Because I think that as well. I think I can sell gold to more people because there's not a lot of Tony Starks with a fake heart running around who need Palladium. Is that actually true? Because I believe what Jim just said to be the truth.
Yeah, in the event of an economic disturbance or a crisis, gold and silver are your metals. Palladium and platinum are not going to help you. They won't.
Yeah. So that brings me to silver because I wanted to spend the last 10 minutes talking about silver because I think silver is a very interesting hybrid between.
I'm going to put up a silver futures chart while you're doing that.
Please do. Yeah. So can you first walk me through the fundamental use case for silver, Dana, before we get to the precious part? What is it used for now?
Well, it's in a lot of places: electronics, EVs, jewelry, munitions. I hear every time they fire off a cruise missile, there's 30 pounds of silver in one of those things. And now Samsung has come out with a new battery. They're working on it. It's not released yet, but it's a silver battery for EVs versus a lithium battery. And there's two components about it that are meaningful. Number one, it's less expensive to make. It takes a tenth of the time to charge, and it gets you double the mileage. So you can charge in 30 minutes and get 600 miles on a charge. Oh, and it doesn't blow up when salt water hits it if you're in a flood in Florida.
That's a good option.
We need that here.
Yes, exactly.
Yeah, so Bobby, why does the chart look like garbage then?
So in a weird way, it doesn't. And I was actually, when you guys were done, Dana, if you're not done talking, continue. But I want to go over this chart purely technically because something's happening in it.
No, I think I've covered the basic fundamentals for silver. I do like it. It's under pricing relative to gold. The gold to silver ratio, the number of ounces of silver it takes to equal an ounce of gold, historically it's been 20 to 1, 40 to 1. In modern times, it's been 60 to 80 to 1. It's over 80 to 1 today, about 85 to 1, which is high, which means it's cheap relative to gold, which means simply gold's leading the charge right now. And what's the time frame on this chart? This is a 3 year.
It's a daily chart. You want a longer one?
Go back a year.
Yeah, here's a year of dailies. I'll put up a weekly for you so you can look at them more. But I want to go back to this daily, Jimmy, so remind me. This is a year of weekly silver futures. So when you do this, it doesn't look so bad.
Right. Okay. Yeah.
This is going back to about 2023 now, Dana.
Right. Yeah. I see that. So silver's trying to break out to higher, but it's always the redheaded stepchild with regard to gold, and it tends to lag a real run in a bull cycle. This is what it did in the late 70s and again in 2010, 2011. It lagged gold for most of the run, and then it caught up with a vengeance. So your timing has to be pretty good for silver if you really want to get that big gain out of it. that multiple, like a double or a triple out of it, which is possible. But you've got to be patient and try to buy intelligently. Again, like palladium and platinum, $29 looks pretty attractive to me. But there's a weakness possibility that could take us to support at about 27. I think there's a lot of support, obviously, at 27 for silver right now.
Clearly.
Yeah. So I like it at under 29 if you can get it. And today's a weaker day. We're actually a hair under it right now. But you may not get that opportunity. So again, you have to pick your timing. Don't get caught up in the hype. We've had an inverse head and shoulders pattern pop up in the silver price that turned into a regular head and shoulders pattern, which we're now breaking down on in the short term over the last 6 months. That's what led to that high at $35. And now, I think we could test 27 again. But that would be a real buy to me.
All right. So I want to do just a sort of quick Path Trading Partners, partially Mike Arnold special on this silver chart, right? So let's start with the weekly because that's usually where we start anyway. All right. The weekly right now is definitely in a short-term downtrend here within a longer-term uptrend here, right? Weekly, as a lot of people watching this know, you have more price data in a weekly bar. Therefore, a weekly signal is stronger than a daily, is stronger than a 4 hour, is stronger than a 60-minute, on and on and on from there. What we're doing right now is we're getting a short-term sort of breakdown with moving averages, short-term moving averages crossing lower. This is what Mike Arnold and I call the rotation zone. So we like to see a market go into it and then come out of it, and that's a buy for us. There's a lot more to it than that, but that's all I'm going to go into right now. This is a 50-week moving average here, the green. Okay, and it's still slightly angled higher. All right. Also, we have a prior sort of test reversal and then breakout here right around at this. I'm not sure what this level is, so I'll just put it up. It's 28, let's call it 2880. All right. Now, because this is a weekly chart, I would never say to somebody, buy at 2880 because it's a weekly and you want to see price action sustain there for about a week and then break out up again. So this would kind of be my area, the sort of convergence of this 2880 area with this 50 week moving average in, which is about 2907. Now, going back to the daily, something is happening on the daily that's of interest to me, and I hadn't looked at it yet, so I'm going to kind of do this on the fly. All right, this is the 200-day. All right, last time we closed below the 200-day, the very next day we closed above it and attempted to move into these short-term ones, which held and pushed us back below the 200-day. I need to see us get above the 200-day, Dana, to the point of not buying lows, rather buy strength. Right now, the daily, as Jim pointed out, looks like shit, right? It's got weakness, closing below the 200-day moving average. But what is forming here? It's not developed. It's not tradable. But what is forming here is a technically correct double bottom. Now, double bottoms are reversal patterns, and there's a couple of characteristics that Mike Arnold and I discovered about double tops and double bottoms. You can see a successful double top trade here. I'm not going to measure if it's a technically correct one. So what Mike and I do is we take our Fibonacci tool, all right, and we measure the distance from here to here. Now, I've got this turned into Gann levels, all right? I've adjusted it to be Gann rather than Fibonacci, but you can use Fibonacci. The right-hand bottom cannot exceed 25% lower than 25 basis points lower, really, than the left-hand bottom, and it should reach within 25 basis points of that left-hand bottom. So what does that mean in English? What I generally do is I'll borrow this blue line here, is I'll put this blue line at the 125% extension, and then I'll put another one at the 75% retracement of this move. Okay?
Yep.
As long as this right hand falls within these two blue lines, it is a high probability, technically correct double. The minute it exceeds it, it can still be a double bottom, but the probabilities drop. by about 12%.
Probabilities for what? That the bottom holds?
The reversal works.
Got it. The
Okay,
reversal
that the
works.
bottom holds and then the reversal reaches its target. So now that we have those two blue lines in place to show where it's going to stay technically correct, that's what Mike and I call it, right? I can now measure the targets, right? And I can go from here to here. And the first target is this green line, which is 175% reversal of that move. And this is the 200% reversal. Those are the two targets. And the last thing I look at, do the targets fall within the move that is being reversed, which is right here? And they do. So, having said all of that bullshit, if I get a daily close above this high right here, that triggers the double. Now, there's still things in the way of it that I'm going to be very careful to watch, right? For example, this particular 21 day, this is the 21 day, and then this is the 50 day, right? So those are obviously resistance, but by the time this turns around and closes above it, one or both of these may be below the high from December 26th. So they may be closing above all of those all at once. If that happens, I'll be coming back and telling you guys I just got long silver.
Which, by the way, you don't like to do.
I hate trading silver. I really do.
I like trading silver.
I'd rather call Dana and get more of that Mexican silver he sent me.
So I do want to know, like, can I set up, because I don't have any physical silver, but I want it. I have physical gold. I have plenty of it. I have guard dogs. I have guns. But if I want to get physical silver, can someone set up like a program with you that like once a month I buy whatever $500 gets me and it just is in perpetuity? Do you do something like that?
Yes, we don't have an automatic program, but we have triggers in our internal computer system where we can put a time trigger on your account or a price trigger on your account. So, every month, second, third of the month, we know to give you a call, send you an email, hey, it's time again. Or if you have a price trigger you're looking for, we can do that as well.
Yeah, I think I'm going to set that up.
Bobby, that is the price trigger I am looking for. So if a settlement above where, Bob, just to give Dana my price trigger, because then I will buy some silver.
So it's the high of December 26th, and a lot of people right now are screaming at the screen going, that was a low volume day. I don't care. The price is the price. And this particular pattern is likely to trigger buyers, especially if these moving averages have gone down to sort of meet that high. And that high is 30.48.5 on the silver futures contract.
I'm calling it 30.50 then, right?
Fair enough.
Make it easy.
Completely fair. Because those two moving averages are going to continue to drift down because the weakness is there. Even if it starts to turn around, those are longer dated moving averages. It's a 50 and a 21. So you need a lot of days of rally to turn those up.
Clearly. Dana, so Amerigold, give me exactly how to get you for the people who are watching right now.
Our website is amergold.com. Amerigold. We are American Gold Exchange. That's another web address that we have, but AMERGOLD is the email, is the web address. Info at amergold.com is the best way to reach us via email, or you can just call us on our toll-free number.
How big is a bar of Palladium in comparison to my Violent flashlight here?
Oh, you can fit about 20 of them in that bar, in that phone, 30 of them.
Cool.
It's very, very
Can I get
compact.
the Tony Stark case, or can I have it made and send it to you?
I'll talk to one of the refineries about creating one of those for you.
Bobby, do you have any last comments? Dana, do you have any last comments? I think this has been very informative so far.
Well, I do think silver's a good buy, but I think you do have to be careful and you do have to be patient because it tends to disappoint before it rewards for the longer term holders. As a trader, silver tends to grind higher and then dump hard and fast when it falls, like all markets do. And today, we're having an anomaly in the stock markets are getting sold off, and the metals tend to follow stocks lower at first. And I call it throwing the baby out with the bathwater.
Amen.
The precious metals get thrown out when there's a dump in the equities markets, and then everybody's like, oh, hold it. We threw the baby out. Get the baby back. And that's what happens, and then the metals rebound.
Yeah, we've talked about that a lot.
Explain to people why that happens?
Yeah, we've talked about that a lot. Generally, people don't want to sell their losing stocks, and if they start to get calls on margin and else, or they just want to raise money and feel better. They sell things that were performing well in order to have more cash in their account.
Yeah.
So that's generally, well, I'll just call it a risk asset sell-off. When risk assets are being sold, people sell the other theoretical risk assets. Then comes the situation where they finally have to sell their stocks. And that's when they buy gold and they buy treasuries.
Right.
So
when we see equity weakness, it's a liquidity event, and the metals tend to get sold off in sympathy. And then the value buyers come in and say, "Oh, this is cheaper right now, and I like it." So that's
Dana, can Jimmy and I design a Futures Edge Finance Unfiltered Tony Stark box to put things in, and then we could sort of promote that? Is that something we can do?
absolutely.
I mean, I look exactly like Tony Stark.
Sure. Yeah, of course you do.
Why
Yeah.
don't you shut
Let's
the
see your
hell up?
chest.
Just
I want to, before I sign this off, I want to add one thing too. There is a very real reason and a real advantage of owning physical metals over, let's say, owning Bitcoin. It's about custody and it is about counterparty risk. When you are holding the gold or palladium in your hand, there is no counterparty risk. When you send $1,000 to the American Gold Exchange and they send you back the gold, there is counterparty risk for about a week. And then as soon as you do it at your incremental levels, you eliminate that. And
there's
I think
one more thing.
Go.
If you have a digital wallet in your house somewhere that's not in a fireproof box and there's a fire, they're going to be able to find your gold because it's not going to be destroyed by the fire. Maybe misshapen a little bit, but it's not going to be destroyed. And they're not going to find your wallet intact.
Yep.
Yeah,
I
I've
don't
had
think
that
they
happen.
do. We're not trying to badmouth it.
Yeah.
But
So again, he is Dana Samuelson. He is the president of the American Gold Exchange. Bobby and I, throughout, we didn't even know we were becoming gold bugs. Apparently that happened over the last few years because a lot of people point finger at us and say, we were just making the fundamental case. And if you extend that out, the fundamental case for owning it physically is very compelling. Anyway, Amerigold.com and 1-800-613-9323 is the American Gold Exchange. That's Bob Iaccino. This is the Futures Edge. Remember, you guys, none of this works without the support you have given us. It is not hyperbolic or dramatic to say that legacy media is continually getting pummeled by the podcast world that we are part of. We are very, very proud of that. We do not bow to the whims of different sponsors or of overzealous producers telling us what we can and cannot say. And because of that is a pure thing. You might think we're full of shit, but at least it's our honest opinions. Thank you guys for joining us on the Futures Edge.